That's an enormous story going on in activism in Japan. So it started off with basically green-mailing and saying, here's a company trading below book, it's got a lot of cash, we'll take the life vest off a drowning man. And it's turned around so that, yeah, but those are only small companies. If you want to do activism with bigger companies, then you have to concentrate on, for example, taking a company that's got a good business and a bad business and saying, you know what, we'd love you a lot more if you didn't have the bad business. And that's the issue with Seven & I. And it's so important because Value Act in Seven & I has, as it did with Olympus, is leaving the company in a better condition than it found it. And obviously that's going to make activism much more attractive to the government. Now, the odd thing about all of this, in a lot of the activist cases, is the activists say, this is what you want we to do. They stamp their feet, they say no, they do a little bit of what they're asked, and in the Seven & I case, Value Act appears to have sold out its position after having really lost its temper a little bit and tried to oust the CEO. And yet the company then turns around and says, but we've had a special group run by outside directors to look at this, and they've decided to do broadly what Value Act told them to do in the first place. So this is the fascinating thing about Japan, is companies take incredible pride in saying, we listen to our customers. But on the other side, they take incredible pride in saying, we don't listen to our shareholders. And it's never completely clear why they do that. But it is going to have to change.
Do you think it is changing for Toyota? You talk about how it's benefiting from cross-holding unwind.
Toyota is an amazing company in that it's got, 122 stocks in its... so it's basically been moonlighting as a portfolio manager, 122 stocks, broadly $130 billion. It's its own biggest shareholder. It would make such a lot of sense if it were to just cancel those shares. And, you know, the market's been saying that for a very long time, and they've been taking no notice. They started unwinding some of this with KDDI, so it was a major investor in a telco company. Don't start me on that. And so the unwind has been accelerated by some scandals in affiliates, and the parent has not taken good enough control of the affiliates and made sure that they come up to the same standard as Toyota does itself. And as with the insurers, the pressures come on them to do the right thing. And actually for investors, it's great. They're finally starting to unwind cross-shareholdings. We have all known for a very long time that there is vast wealth, not only in the net cash of Japanese companies, but in their cross-shareholdings, which I think are generally valued by the market as next to zero worth. But if they will unlock all of that, then that value starts to come to the fore and makes the stocks a lot more attractive.